inflation is going to keep getting worse. It's not just going to be stagflation. We're headed for an inflationary depression.
It's a bigger problem than what we had in 2000 or 2008 or 2020 with COVID. You know, where we are now is, the problems are much bigger. There is no way out that isn't going to be very painful. And so this is a complete disaster. In order to avoid this disaster, we're going to have an even bigger disaster, because the inflation problem is going to get much worse, and the risk is hyperinflation. The next thing that's going to happen is the dollar is going to lose its status. And then that's the beginning of the end, because now America is going to have to figure out how to survive without a trade deficit. How are we going to survive? All the shelves are going to be empty. You can go into Walmart, there's going to be nothing to buy. I think we're getting ready for another Bitcoin crash.
Inflation is a huge problem. See, inflation was the government's solution to the problem until inflation has now become the problem. So what is the solution to the inflation problem? There is none, at least none that is politically acceptable. And so inflation is going to get much worse. Forget about what these central bankers and politicians are saying about their commitment to fight inflation, how they're resolute and how they're determined no matter what to bring the inflation rate back down to 2%. That's never going to happen. The inflation that we're experiencing now in 2022 really started in 2009, 2010. We haven't even caught up to the inflation we created in 2020. That's coming. But there's all this inflation in the pipeline. Now, another reason that inflation did not become as big a problem is because the way the money entered the economy in many cases was through the banking system, through the financial markets. So the prices that were impacted the most by inflation were stock prices, bond prices, real estate prices. And so people didn't mind when inflation was making them richer. In fact, people like that. Politicians like that. Everybody likes a bull market. So when inflation is first entering the economy and the first impact it has is on asset prices, nobody's worried about it. And so the central bankers kept creating it. And so the central banks kept interest rates low and kept printing money. Now, they called it quantitative easing, but quantitative easing is basically a euphemism for inflation. That's what it is. When the Federal Reserve launched quantitative easing for the first time in 2009, what it really decided to do was monetize government debt and create inflation. That's what quantitative easing was all about. It was about inflation. They have to let interest rates go up. If you want to fight inflation, you got to let interest rates go up. But the other thing you have to do to fight inflation is to make government spending go down, because government spending is the source of that inflation. Governments are running deficits, and the central banks are monetizing those deficits by creating inflation. Governments are actually funding themselves through inflation. The spending that is the source of the inflation, because the spending is being monetized by the central bank. So instead of fighting inflation, they created additional inflation. Instead of putting out the fire, they poured gasoline on the fire and just pretended that they were going to put it out.
Now we get a stock market crash, we get a recession, we get a financial crisis. The Fed can't do anything. And if the Fed can't do anything, the government can't do anything. Because where does the government get money to stimulate or to bail out? From the Fed. A lot of people don't realize this, but now that the Fed is raising interest rates, it's losing a ton of money on its $9 trillion balance sheet. But while interest rates were at zero, and they had this big balance sheet and they were collecting all this income, they were making money, and so they were sending Congress a check, a lot of money, which helped offset the deficits. Now the Fed is losing billions, tens of billions, soon hundreds of billions. They're sending Congress a bill. The Fed needs a bailout from the U.S. government. So, this is the very different situation that we've been in. This is the end game, right? The end of the road. It's very difficult for anyone in government to be honest with the American public, because, you know, the voters really don't have the intellect for honesty. They, you know, they don't have the attention span to be told the truth about how bad things are. So everybody wants something for nothing from the government. They don't want to hear, oh God, you're gonna have to suffer. This is some bitter tasting medicine, but don't worry, you know, you'll get healthy eventually. Americans don't want that. They want, you know, they want the get rich quick scheme. You know, they want, you know, they don't want to exercise and diet. You know, they want a cream that they could just rub on, a miracle cream to get rid of the cellulite or whatever. They don't want to actually, there is no way out that isn't going to be very painful. I mean, there is a proper way out, right? The government can do the right thing. I mean, they've never done the right thing before.
The economy is weak. Print money, lower interest rates. Companies are failing. Let's bail them out. How do we pay for that? Print money, create inflation. So inflation has been kind of the one-trick pony. It's been a cure-all. Whatever ails us, just inflation is going to be the cure. Well, now that inflation is the disease, where's the cure? There is none. Any more stimulus, and we end up with an overdose. And that is where we are right now. The world still believes that the Federal Reserve is serious about bringing inflation back down to 2%, and that it has the ability to bring inflation back down, but it doesn't. The fact that we had 2% inflation in the last decade, that's the aberration. That's never happening again. We're going to have massive inflation because governments are committed to massive deficit spending. They've taken on so much debt. The United States has a $31 trillion debt right now, and it's already impossible to pay that debt, making the inflation problem, which is already bad, worse. You see, when we had the financial crisis and then when we had the COVID crisis, inflation was still officially below 2%. So the Federal Reserve could get away with quantitative easing. They could get away with 0% interest rates because they were able to say we could do this because we don't have enough inflation. But when they try to do it again, when the problem is too much inflation, they no longer have an excuse for creating inflation. And when they try to do that, it's going to blow up because then you're going to have a dollar crisis. Then you're going to have a sovereign debt crisis. And that is a whole new level of financial crisis.
You know, we already have a $2 trillion deficit. I mean, these numbers are too big, but corporations can't finance the debt. State and local governments have got tons of debt. Individuals have record amounts of debt, record low savings, record high debt, credit card debt, auto loans, student loans, mortgage debt. So at some point, you know, the Fed is going to turn its attention from inflation to this economic implosion, this financial crisis. And when that happens, the dollar is going to drop like a stone. And then inflation is going to take off. And then I think this whole process is going to escalate, because as the dollar really starts to fall and inflation really starts to rise, there would be massive bankruptcies, foreclosures in the United States. A lot of the debt would just default and go away because it'd be unpayable. A lot of companies would go bankrupt. I mean, especially the companies that don't have any earnings and have been kept afloat by cheap money and the ability to sell equity. So a lot of companies would disappear. A lot of jobs would go away. We have to abandon everything we've been doing and admit that it's been a mistake, everything we've been doing for the decades. Their government really has no history of admitting to a mistake. All they do is double down on their mistakes. If something doesn't work, well, just do it bigger. Again, well, you do it bigger again. So we're just going to keep on inflating until the dollar collapses and we have, you know, massive inflation, and then we'll have price controls and shortages and black markets and riots and, you know, public unrest, and then who knows what's going to follow that.
Another indication today of the weakness of the economy was the consumer confidence numbers for October, which unexpectedly dropped way more than expected. The prior month was at 108, and that was actually revised down a tad to 107.8, but the consensus for October was 106, and we came out at 102.5, way below estimates. And again, the consensus range went from a low of 104.5 to a high of 110, and again, we came out beneath the low end of expectations. So why are consumers becoming less confident? Because the economy is getting weaker as consumer prices are moving up. So we get stronger inflation, weaker economy, This is bad news. In fact, it's not bad news in and of itself. A lot of people think that confidence is important because consumers need confidence to go out and borrow and spend. I think consumers will borrow and spend even if they lack confidence, because the one thing they'll do is borrow and spend. That's kind of the American way. Unfortunately, the reason Americans will stop borrowing and spending is because they're broke and they don't have any more credit and they just can't afford to keep doing it. And I think that's really what's going on. So it's not that consumer confidence is going to lead to less spending. I think that less spending has led to less confidence because the people can't go out and buy the things they need or the things they want because they can't afford it anymore.
I mean, we did the opposite of what we should have done during COVID. What we should have done during COVID, well, obviously we shouldn't have done anything. We shouldn't have locked down. We shouldn't have quarantined. We should have done, what Sweden did. And I said that at the time. But if we were going to make the mistake of ordering people not to go to work, we should have allowed the money supply to contract and allowed the economy to implode, because if we're not going to go to work and we're not going to produce stuff, well, then we have to have a massive recession. People have to stop spending because they're no longer earning. They're no longer producing. But we did the most reckless thing you could have possibly done. We told people not to go to work, but then we sent them checks. And many people were getting checks that were double or triple what they were earning when they actually were productive. And we said, hey, you don't have a job, but here's a bunch of money. Go out and buy stuff. Buy what? Nobody was making anything. All they were making was money. So we created massive inflation. They should have been contracting the money supply, along with a contraction in the production of goods and services. We've got a real sovereign debt and currency crisis coming. And this big rally in the dollar right now, this is just a head fake. I mean, this fact that people are buying the dollar is just allowing our problems to get worse, because we just go deeper into debt, we borrow more money and import more products.
The U.S. inflation rate is going to get higher as the U.S. economy gets weaker, and that is going to prompt even bigger deficit spending. We're going to get even more fiscal stimulus. And of course, monetary policy is probably also going to adjust, because there's no way you can have more fiscal stimulus without monetary stimulus to make it all possible. So then the Fed has to do a U-turn and go from quantitative tightening to quantitative easing. And that's when the dollar falls through the floor and then inflation goes through the roof.